We all pay for insurance, right? But have you ever stopped to think about what actually happens after you sign that policy? You know, behind that piece of paper, there's this whole complex world of professionals and rules that most of us never, ever see. So today, we're going to pull back the curtain on that unseen world.
I mean, think about it. When you have to file a claim, it feels like it's just you versus the insurance company. But that's not the whole story. Not even close. There's a whole cast of characters, a whole regulated ecosystem, working behind the scenes to make sure everything runs the way it's supposed to, fairly, legally, and smoothly.
So in this explainer, we're going to meet all the key players. We'll start with the folks on the front line, the agents and brokers. Then we'll go behind the scenes with TPAs and reinsurers. And finally, we'll meet the people who actually assess the damage. Let's dive in.
Yeah, the insurance system is definitely not a free-for-all. It's this intricate web of professionals, and every single one of them is licensed and regulated for a very specific job. And these rules, they aren't just red tape, you know? They're the foundation of a system you can actually count on when you need it the most.
Okay, let's kick things off with the people you are most likely to talk to. You've probably heard the terms insurance agent and insurance broker thrown around, maybe even used interchangeably. But trust me, they are fundamentally different jobs with totally different responsibilities and, this is the important part, different loyalties.
So here's the absolute core difference, the one thing to remember. An insurance agent works for the insurance company. Their job is to sell you that company's products. A broker, on the other hand, works for you. They aren't tied to any one insurer, so their job is to look across the whole market and find the best possible policy for your needs. Sometimes they'll even give you broader advice on managing risk.
And because a broker is on your team, the regulations are way stricter. They have to keep your money in a special, separate bank account. They have to carry their own OOPS insurance. It's called professional indemnity insurance. And they have to go through 100 hours of pretty intense training. Now, agents have licensing rules too, but the bar is set way higher for brokers, all to protect you, the client.
The financial side of things is also a huge deal for brokers. A direct broker, they need at least 75 lakhs in capital just to get started. And that number jumps all the way to 5 crores for a composite broker. Now compare that to an agent who has no minimum capital requirement at all. This rule really makes sure that brokers are financially stable, serious players. All right, next up. Have you ever gone to a hospital and used your cashless health insurance? If you have, then you've dealt with a third-party administrator, a TPA, probably without even realizing it. They are the invisible but absolutely essential link in the health insurance chain. The TPA's main job is to be the go-between. They're the ones connecting you, the hospital, and the insurance company, and they handle all the heavy administrative work of a claim. They are literally the reason you can get medical care without having to pay a huge bill up front. They make that whole process happen. Now, becoming a licensed TPA isn't easy. It requires some serious financial muscle. A company needs at least 4 crore rupees in paid-up capital just to open its doors. And it doesn't stop there. They also have to maintain a working capital of at least 1 crore rupees at all times. So yeah, this is not a business you can just start out of your garage. These rules make sure TPAs are stable, reliable partners.
But it's not just about the money. TPAs have to meet some really specific professional standards. And this one is key. At least one director on their board must be a qualified medical doctor. That's not just a formality. It makes sure there's real medical expertise at the very top, guiding decisions about your health claims.
Okay, so we've got agents selling policies, TPAs managing claims, but what happens when something truly massive hits, like a major earthquake or a catastrophic flood? What protects the insurance company itself from going bankrupt? Well, that's where our next player comes in, the reinsurer. Reinsurance is pretty much exactly what it sounds like. An insurance company pays another, usually much larger company, the reinsurer, to take on a chunk of its risk. This is what allows them to cover those gigantic, catastrophic events that would be way too big for any single company to handle. It is the ultimate safety net.
And here's where we find a really subtle but super important difference in the rules. For general insurance, think car or home insurance, a special reserve fund is mandatory. But for life insurance, it's not. And the key to understanding why is a little acronym called IBNR.
IBNR stands for Incurred But Not Reported. Think about it like this. On any given day, a bunch of car accidents have happened, but not everyone has filed their claim yet. General insurers know those claims are coming, so they are legally required to set aside money for them in this IBNR fund. It guarantees stability when you're dealing with unpredictable events.
Life insurance, on the other hand, deals with a certainty, death, which makes it a lot more predictable.
All right, we are almost at the end of our journey. The claim has been filed, the process is moving along. Now, somebody needs to actually go out and see the damage. That person is our final player, the surveyor or loss assessor.
The surveyor is the on-the-ground expert, the investigator. After you file a claim for, let's say, a damaged car or a flooded basement, the insurance company sends a surveyor to check it out. Their job is to figure out, objectively, what happened, how bad the damage is, and what the financial loss really is.
And because their judgment is so important, surveyors are bound by a really strict code of conduct. They have to be objective. They have to be impartial. They have a duty to be fair, not just to the insurance company that hired them, but to you, the policyholder, too. Their professional integrity is basically the bedrock of a fair claims process.
So we've met the whole team: agents, brokers, TPAs, reinsurers, and surveyors. We've seen all the capital requirements, the training, the codes of conduct, which brings us to the big question. Why? Why does all this matter?
In the end, this whole complicated web of rules isn't just bureaucracy for the sake of it. It's all designed for one single reason: to build a system that you can actually trust. These regulations make sure that the professionals are qualified, the companies are financially sound, and the process is fair. It's what makes sure that the insurance safety net is really there when you fall.
And that brings us to one final thought. We've just explored this very, very human system of experts and judgment calls. But as AI gets better and better at pricing risk and processing claims, which of these human roles will become even more valuable? And which ones, well, which ones might just vanish? It's definitely something to think about. Thanks for joining us.